The Central Bank of Nigeria has posted a profit of 38.8 billion naira in 2024, reversing its previous year's record loss of 1.15 trillion naira. This recovery was driven by a sharp rise in income from financial investments and revaluation gains totaling 1.89 trillion naira and a tripling of other income to 12.9 trillion naira. However, the bank's derivatives losses worsened, hitting 13.88 trillion naira. Total assets surged to 117.6 trillion naira, buoyed by higher foreign reserves. And despite the return to profit, CBN's equity dropped by half, and it still carries large accumulated losses, raising questions about financial stability. We speak now with Mohammed Ndako, investment analyst at Optimum Global. It's great to have you here with us.
Well, thanks for having me.
Yeah, so some sort of turnaround in CBN's books from 2023 losses of 1.15 trillion, and now we're seeing a profit of 38.8 billion? Yeah, billion. So what has facilitated that turnaround? What are the drivers of this?
Okay, so they had four main drivers. The first was investment income, which grew by about 13.8%. They also generated about 308 billion naira from income on FX swaps. They generated about 491 billion naira from income on foreign securities. They also generated quite a significant amount from a turnaround of 28.1 billion naira in 2023 to 1.89 billion naira from trading financial assets. And a large part of the income came from FX revaluation gains. That pretty much rose by 225% to 11.88 trillion naira.
And let's stay on that revaluation gains. What do you think this surge, right? This is unrealized, just over 11 trillion, right? What does it signify? What does it signal at? And, what are the drivers there as well of that?
Well, the drivers are pretty much that the CBN has accumulated huge amounts of external reserves of foreign currency, and over the time frame 2023 to 2024, we've also seen the naira depreciate by a significant amount, right? So those are pretty much what we are seeing. We are seeing the naira value, which is now being reported as a gain on the financial statement.
All right, it'll be interesting to see how that goes on. But we know that we're also seeing the CBN, not we, the CBN is recording massive 13.88 trillion loss on derivatives. What's behind this growing losses?
Okay, so it has been clarified in the past. The present administration stated that they inherited legacy derivative contracts from the previous administration, and so this is pretty much them trying to settle those contracts. So a quick example is, say in 2022, under the previous administration, they entered into a contract stating that, contract asking them to sell the dollar at, say, 700 naira per dollar in 2024. 2024, the market rate has now increased to 1,450 naira. So we have a difference of 750 naira, which would now have to be incurred by the CBN as a loss, right? So you multiply that by the volume, the contract volumes, which are in millions of dollars, and you start to see a clearer picture of why these derivative losses have persisted.
And we're also seeing a significant surge in foreign reserve, right? So give us a picture of that and how this could perhaps impact currency, exchange rates, and other indices that it could impact one way or the other.
Well, foreign reserves, for a while, I mean, it depends on consistent dollar inflows, right? So we're talking about inflows from oil revenue. We're talking about FDIs bringing in capital. We're talking about, say, a good macroeconomic environment. And if this persists, yes, we should expect to see, continuous increase in that external reserve. But at the moment, we have, the Brent crude is at $61 per barrel, below our benchmark assumption. We're also seeing global uncertainties, especially surrounding trade and tariff talks. So this has brought in, led to pretty much uncertainties surrounding emerging market currencies and their market in general. And that's why, you would have noticed that the Naira has been depreciating for over a month now, right? Same with all the emerging market currencies.
Right.
So investors would pretty much want to put their funds in environments with stable monetary policy and stable exchange rate.
Can we say we have that?
We don't necessarily have that.
Not necessarily, all right. Still sticking with their books as well, we know that cash and cash and bank balances, they have plunged. Does this signal that the CBN is having some sort of liquidity crunch at the moment? Well,
there are no liquidity issues. I mean, the CBN is the sole issue of the Naira, and they can manage liquidity through many ways, right? So I think that alleviates near-term concerns. They have a reserve of $38.8 billion, so that also provides significant buffer, to any immediate concerns about liquidity. Yeah, the CBN, I do not think they have a liquidity crunch. It's just most likely due to operational shift.
Right.
Since the new administration got into the CBN, they have prioritized a tightening cycle, right? Trying to pretty much mop up liquidity, excess liquidity in the market. So that is what we're seeing, and it's reflecting in their cash balances.
Do you see that tightening cycle breaking anytime soon, especially considering the last MPC we had a hold?
Yeah, so I do not necessarily see that breaking anytime soon. The last inflation reports, we saw a surge, right? And given global uncertainties, we feel at a point consumers would have to start bearing the impact of the increase in prices, that would stem from that. So yeah, I don't think, we would see a shift in policy stance for now. We believe
more tightening.
Not necessarily more tightening, but holding rates as it is.
Perhaps. All right. We'll see how that pans out. Let's get back to the books. The value of loans and receivables, that also dropped significantly. Do you think that should lead to a more conservative lending approach? Or what are your thoughts on that?
Well, there are two primary reasons for the drop in loans and receivable balances. The first is a recovery from the quasi-fiscal lending structure that the prior management had. Historically, the CBN had prioritized that sort of intervention lending to priority sectors, agriculture, manufacturing, SMEs, and the main idea is just to stimulate the economy. So we've had examples like, say, the Anchor Borrowers Program, the rail sector stimulative policies. So all these are to help stimulate economic growth. And with the new administration coming in, now prioritized a more orthodox monetary stance, trying to shift away from the quasi-fiscal lending structure that were implemented in the past to prioritizing core monetary policy activity. So that is pretty much the reason why we've seen those decline. So they have also increased collections of payments, and part of the decline is also due to write-offs from bad debts, and also reorganizing some of the loan structures.
Of course, as you have pointed out, there is a new sheriff, right, governing the bank. He's been in office for over a year now. But there are those who may put that aside and look at the books and question whether or not the CBN is financially stable. We're seeing liabilities, rise sharply as well to 116.59 trillion. Equity is also falling by 50%. So, I mean, in terms of the financial stability of the CBN, what are your thoughts on that?
Central banks don't necessarily need to have positive equity to conduct monetary policy operations. Right? That's because they do not require positive equity to run their monetary policy operations. What they need is credibility, and the ability to conduct those policies efficiently.
Also coming to, this resolving whatever may be raising questions in anyone's, minds, what policy steps do you believe the CBN should take to address especially the losses, the recurring losses?
Well, first and foremost, I think, they would have to review all prior derivative obligations. Right, try to settle the ones that can be settled, like we saw them do 2024. Also try to unwind positions or renegotiate the contract, right, to a more market reflective term. Another thing that should be done is, strengthen risk management. Losses doubling from 6.25 trillion, right, in 2023, more than doubling in 2024, shows that there are still risk management concerns, and that also need to be strengthened.
And finally, taking a look at this whole financial development, how do you see this impacting monetary policy, currency in circulation, inflation, and all of that, broadly speaking?
Well, broadly speaking, we don't believe, the statements have an impact on macroeconomic conditions, right? The CBN has an independent unit, the Monetary Policy Committee, and they pretty much have everything to do with setting policy goals, and they use economic trends, GDP, inflation, to set their target or goals, right? So the CBN's result has pretty much nothing to do with with
so it's
economic
isolated.
It's isolated.
All right, fair enough. Thank you so much for your contribution to the conversation. Mohammed Ndako, investment analyst at Optimum Global. It's been a pleasure having you.
Thank you very much. Thanks for having me.
A pleasure. All right, the show continues here on Business Edge. Stay with us.